Yesterday, Ryan asked me a question. He said, Miles, if you could hold 5 altcoins in your portfolio for the next 1 to 2 years, what altcoins would you pick? And I had a long, hard think about it. And I came up with a list of 5 altcoins that I think I'd be comfortable holding in a 5 token portfolio for the next 1 to 2 years. And in today's video, I'm going to explain my logic behind these 5 altcoins. One of them, in my opinion, is going to be quite controversial. And it's on the thumbnail, but I will explain my logic as to why I have it in here. And really kind of help guide you guys through my thought process as to why I have these altcoins, these top 5 altcoins in my portfolio, or at least if I was building a 5 altcoin portfolio, these are the 5 tokens I'd pick. Rand was actually supposed to reveal them on the show yesterday, but I'm pretty sure he left them blank, which is good because today we can start fresh and I can finally reveal them. If you didn't watch his show yesterday, he basically got many of the top investors in crypto to give him their top 5 picks. Today, I am giving you my top 5 picks. Obviously, there's many altcoins I couldn't fit in here. In fact, it was almost the hardest thing I've ever done, having to nail down my portfolio to 5 picks, because typically I try and hold between like 20 to 30 projects, sometimes even more depending on market conditions, but right now about 20 projects. So nailing that down into the 5 that I'd hold was quite difficult. But I am going to go from order of least risky to most risky to kind of frame my logic right now. But of course, there are many great projects that I'm missing out on in today's video. So if your project didn't make this 5, I probably do hold it. I just probably couldn't fit it into this video because I had to be selective and cutthroat with what I pick. And this is a fun exercise to do, so I recommend you guys do it in your own time as well. But let's start with the big daddy, Ethereum. Obviously, Ethereum has to be the top of this portfolio, and in real life, this is my biggest holding as well, just because I believe we are heading towards an Ethereum-based future. I think the future will be multi-chain. So there'll be many other L1s that kind of factor in to the market. I think Ethereum, though, that is where the majority of the developer presence is. That's where the first mover advantage is. And that's also right now where the emphasis is, in terms of we've got all these L2s now helping scale Ethereum. And it's clear that that ecosystem is just developing at a faster pace to other ecosystems. Not saying the future can't be multi-chain. I definitely think it will be. But I think we'll see a future comprised of kind of alt niche L1s that have their own niches in gaming, have their own niches in DeFi, and then you've got Ethereum as kind of that overarching biggest L1 in the market. So it's hard not to bet on Ethereum. Now, their roadmap is quite interesting because they're essentially going after this, what I presume will be like a decade-long roadmap of upgrades. The merge was the very first upgrade that we saw. There'll be 4 more upgrades: the Surge, the Verge, the Purge, and the Splurge, all implementing different things. We're getting zk-Rollups implemented into Ethereum. They were going to do sharding. They decided not to. They decided to go down a slightly different path, but that they are going through many different phases to help Ethereum scale, because obviously the major problem with Ethereum right now is, yes, it's objectively more decentralized than some other L1s, but no, it's not as scalable, because that's one of the trade-offs they made. As we all know, the blockchain trilemma makes it very difficult to have all 3 components of security, decentralization, and scalability all at once. So hopefully this roadmap helps them on their path to scalability. But as I've talked about in yesterday's show, in the meantime, I think this is where L2s factor in to help Ethereum scale. So that is something to watch out for, the L2 narrative that's growing off the back of Ethereum. If we look at some of the statistics behind Ethereum, one of the major things that the merge did was it incentivized people to stake, because now you can actually earn yield off your Ethereum. It's not a stagnant token from a retail perspective anymore, although it never was, because you could liquid stake. Now you can directly stake into a validator node. We can see a few percent of the total ETH supply is now deposited, actually more than a few percent, more than 10%, which is obviously a good thing for the Ethereum price, because more Ethereum's locked up. But I think the biggest argument for Ethereum right now does come off the back of its shift towards becoming deflationary. Now, what the merge did was it shifted Ethereum from proof of work to proof of stake. But what a side effect of this is the issuance of Ethereum has significantly decreased, but the burn rate of Ethereum obviously stays the same, or is based on market conditions. So if we look at the current issuance of Ethereum, yes, technically it is slightly inflationary now, but let's just compare it to what it was before the merge. And we can see that the inflation rate is so much lower. Like on proof of work, the inflation rate was 3.584% per year. On proof of stake, the inflation rate is 0.009% per year. And just to contextualize this for you guys, if Proof of stake was never implemented, so we kept going on proof of work. Since the date of the merge, Ethereum would have emitted another $1 billion worth of tokens onto the market. With proof of stake, we've emitted less than $1 million worth of tokens onto the market. So that's 1,000x decline in the issuance. So the theory with this is that obviously now technically it's slightly inflationary. That's because the network isn't being used as much as the bear market. But the logic is when the bull market comes back around, when all these projects start developing on Ethereum and launching on Ethereum, and more people are swapping on Ethereum and just using the network in general, as what tends to happen when bull markets come around, then what we're going to see is that burn rate significantly increase. But since the issuance has already decreased, that will tilt Ethereum onto the deflationary side of the scales. And that is like your big bet from a tokenomics perspective, that Ethereum will become consistently deflationary. And that is definitely the path Ethereum is going on. It's also the biggest chain in terms of DeFi. You guys probably don't need me to run through my entire Ethereum thesis here because most of us are bullish on Ethereum, and it is one that I'm heavily stacking and is my biggest holding, as I explained before. But another thing to note is just the risk reward. Of course, Ethereum's not going to go up as much as some of the alt L1s, but when it has drawdowns, it draws down significantly less than other L1s. So Ethereum's change year to date is minus 67% compared to some of these other projects. DOT minus 81%, Solana minus 92%, Avalanche minus 88%. It doesn't tend to draw down as much. It's less volatile. So it fits that risk reward profile of, yes, you need to put more money in to exhibit the same returns as smaller caps, but at the same time, you're not going to experience as severe drawdowns as other altcoins. Now, I'm addicted to stacking ETH. I said this on my Twitter. I can't get enough of ETH. With some altcoins, I'm more selective with when I DCA. Like the smaller cap, the smaller market cap an altcoin has, the more selective I am when I DCA. So I'll only want to DCA when the price lines up very nicely with what I think is a local bottom, or what I think is an extremely fearful sentiment in the market. But with a coin like Ethereum, I'm pretty much happy to just DCA whenever because I have a very clear outlook on Ethereum. I'm willing to hold it for 5 to 10 years, and I'm not really chopping in and out of my Ethereum position. It's kind of a DCA and hold kind of bag for me, similar to my Bitcoin, whereas some of the other altcoins I'm a lot more cutthroat with when I take profits, and I'm also a lot more stringent with when I choose to DCA. So that leads me to my next one, which is Polygon, which is probably next on the risk curve. And Polygon is a pretty obvious one, in my opinion, if you're looking at a 1 to 2 year hold. Yes, it's pumped a lot since the bottom, which is probably the only negative here, that you are buying at a slightly inflated price. But this is for good reason, and the market isn't stupid. It's clearly seeing the shift that is happening right now. And if you do speak to developers at the conferences lately, you'll notice a trend, and that is a lot of them are developing on Polygon. And if you talk to a lot of people not in crypto as well, a lot of them, when considering to launch crypto products, they are starting to factor in Polygon into their thinking as to what chain they will develop on. And I think this is the biggest argument for Polygon. It's that a lot of developers are choosing MATIC because you still get exposure to the Ethereum ecosystem. It's EVM, so it's easy to launch, but it's also a lot cheaper and faster than Ethereum. And they just have a very, very good business development team to help incentivize development. It's clear. We saw DraftKings, we saw Ticketmaster, we saw Adobe, we saw Stripe, we saw Meta, we saw Flipkart, Reddit, Disney. Since then, we've seen even more. We've seen Nike as well. A lot of them are launching their NFTs on Polygon, and this is for good reason. Even the Instagram integrated NFTs were on Polygon. Reddit, that NFT program, that was quite successful. That was a proof of concept that, in my opinion, was very successful, and that was also on Polygon. So the BizDev team is strong. The tech probably isn't as strong as some of the other chains right now, but I think what you're betting on is adoption. And given its real-world partnerships, I think you can make a very strong argument for Polygon's adoption exceeding a lot of the other L1s and L2s in the space. So even if the tech isn't there yet, hopefully they get to a point where the tech is of the standard needed to host all of these users. And that's my only question mark when it comes to Polygon, because in terms of adoption and in terms of partnerships, they are big winners. And we can see this on the charts as well. The daily active addresses are skyrocketing, plus 300,000 a day. We had some days over 700,000, which is absolutely insane. The Polygon daily transactions chart, although it looks like it's dropped off a lot, you have to put this in perspective. It's still doing 3 million transactions a day. In the bull run, it was doing 7 million transactions a day. For perspective, Ethereum does roughly 700K a day. Arbitrum did 650,000 yesterday. Polygon's still doing almost 5x that. So it still is being used a lot more than these other networks. And obviously that is in part to do with the fact that companies like Starbucks and Meta and Reddit are starting to do loyalty programs, NFTs on the MATIC network itself. And this has resulted in the NFT OpenSea volume increasing over last year, which is interesting because last year was there was a lot more hype for crypto. There was a lot more market participants. And this year, 1 year later, Polygon's NFT has actually increased, which is interesting to note. One of the things that they are implementing to improve their tech stack, to become faster, to become a more efficient L2, because their goal ultimately is to be the Swiss Army knife scaling solution to scale Ethereum, is zk-Rollups. That is one big initiative they're launching, zk-EVM Rollups, which is a construction on top of Ethereum that aims to solve scalability through mass transfer processing rolled into a single transaction. That is something to look out for in the future, because Polygon essentially has a plug-and-play approach to scaling Ethereum. They have a variety of tools which they use to achieve their goal of scaling the Ethereum network. And what I actually did before I get into my third altcoin out of the 5 is I started building a portfolio on Polygon that you guys can DCA into. So right now, I built it on nested with a variety of assets. PYR, that's an asset I think is at a pretty good buy zone long term right now. So I added that. I did a tweet on that yesterday if you want to check that out. ETH, of course, as we spoke about today, it's just an altcoin that I'm comfortable holding long term. BNB, Link gains, which we've done very well on. Link as well, up 11%, and Lido as well. Although we're down on it, we had a small allocation in the beginning. So overall, we are up 2%. Not a huge amount, but considering ETH and Bitcoin are down in the interim, it's not a bad result at all. We're still heavily in stables, so my plan is to DCA into this Polygon portfolio over the next 6 to 12 months and gradually get this stable balance down. So if you want to DCA with me, you can copy the portfolio. We're going to be managing it live on the show, and there is a link in the description to do so where 2 lucky copiers will win $1,000. So if you want to join along with my DCAs, link in the description. And there's also a BNB portfolio, which I'll be building as well, and an Arbitrum one, but we're taking it slow, taking the slow approach. We're building them up over time. And yeah, I'll be very transparent with what I buy, what I sell, and let you guys know what I'm doing on all of these shows and my logic behind it. Okay, altcoin number 3 out of the 5 now. I went a little bit cheeky with this because technically it's not one altcoin. Technically it's 3 altcoins, but it is one index. So it's only one token that you need to purchase if you're purchasing these 3. And that is the Bluebird index on Binance. Now, if you don't know what the Bluebird index is it's essentially an index comprising of 3 assets that you can purchase on Binance, which includes BNB, weighted at 51%, Doge, weighted at 41%, and Mask, weighted at 6%. So essentially, it's BNB and Doge. But there's some very interesting and compelling reasons as to why I do like this as an investment over the 1 to 2 year time frame that Rand specified. And let me go through that logic now, because there's a lot to unpack here. The first thing I want to unpack is BNB. Why would I want to have exposure to BNB? Well, it's because now, after FTX especially, BNB is just by clear the leader in the space in terms of total exchange volume. We could see that Binance last month did $505 billion out of the $673 billion total for the space. So it's doing over 75% of the volume in the space, which is crazy. It honestly makes me a bit worried. Like, it's almost a monopoly, but it's hard to deny. And if you can't beat them, join them. And I've been speaking about BNB for a while, probably for the last 6 months. I've been open about the fact that I'm accumulating BNB, and I think now the case is probably stronger than ever. It's kind of a 2-pronged approach though, because if you invest in BNB, you're not just getting exposure to the exchange rev. You're getting exposure because people need to stake BNB to get discounts on exchange trading fees, but you're also getting exposure to the BSC chain, which has been quite strong. If we do look at the total TVL for BSC, it is still in the top 3 of all protocols. It's actually number 2 after Ethereum with a $5.47 billion worth of TVL. So it's a very used chain, and also it has some of that exchange growth to underpin its fundamentals too. Now, if we look at TA, maybe this is the most compelling reason of all to have exposure to BNB. And this is the fact that Binance versus the Bitcoin charts, this is weighted against Bitcoin, has been continuously printing all-time highs. We broke out of this range. We haven't even retested. We blasted straight through. And currently we are on this upwards trend at the moment, this diagonal trend. But we could see that historically, holding BNB has almost always outperformed Bitcoin, apart from one period in 2021. If you've been holding BNB over the last year, you'd be very, very happy, because not only has it not drawn down as much as Bitcoin, Dogecoin, it's actually outperformed. And it's clear why, because of the factors that I mentioned before. So the chart is very, very, very bullish for BNB. And that's one of the major reasons why I think holding it, you can't really go wrong holding BNB long term. And that's why it's in my 1 to 2 year list. Now, obviously, the second component of Bluebird is Doge. Now, this is probably the most controversial one of this entire video because Doge is a meme coin and a lot of people fade it just because it's a meme coin. But we know memes in crypto tend to pay off. And we know solid memes in crypto actually end up outperforming a lot of their counterparts, which maybe have quote unquote like more sound fundamentals. But the thing with Doge is that it's just clear it has that retail hype. It's clear that it appeals to that retail audience. Elon Musk, the richest and probably the most famous person in the world as well, is an advocate of Doge. He recently said obnoxious threads like this make me want to go all in on Doge. He says it's inevitable, the DogeCoin standard. I know he jokes and I know he memes, but look, it is clear that Elon is a fan of Doge. And when we look at this, slides from the Twitter company talk, it's very interesting because he listed all of the things that they are trying to do at Twitter. For example, they're trying to do encrypted DMs, long form tweets. They're relaunching Blue Verified, but he left the payments column blank. And this is very interesting. I think he did this on purpose because Twitter will integrate payments at some point. It's basically inevitable. But we have to ask ourselves which coins or which cryptos, if they do crypto payments, which I think Elon will because he's an advocate of blockchain, which cryptos will they use as payments? And it's pretty obvious that Doge is going to be one of them, or at least we can make a strong guess that Doge is going to be one of them. And it's interesting because CZ actually invested in Twitter. CZ invested $500 million in Twitter. Then they launched the Bluebird index, which comprises of BNB, Doge, and Mask. And then CZ essentially hinted at those coins being potentially used for payments on Twitter because, I mean, it's called Bluebird. What's the logo of Twitter? It's a Bluebird. You can see in the top left, it's technically white, but that's because I'm on dark mode. It is a Bluebird. So I think CZ's hinting at something here that these assets could be used for payments. It just makes sense. He invested in Twitter. Doge, Elon has been a big fan of for a while, and they've called it the Bluebird index. So I guess the overarching reason to invest would be that potentially Twitter will integrate payments for these assets. But even excluding that, because we can't just bet on Twitter payments, of course, even excluding that, I'd be happy to hold BNB in isolation. I'd be happy to hold Dogecoin in isolation. And Mask, which is weighted very low, to be honest, I don't know much about it, and there's not much info about it, but it is only a 6% weighting. And if CZ's put it in this index, he's likely done it for a reason. They say that they're a network aiming to bridge Web 2 to Web 3. I don't know exactly how this factors in to the entire index, but if it's in the index, it's probably in there for a reason, and it's not random. These guys make calculated decisions, so I'm happy to invest in it as a whole, obviously being more weighted towards Doge and BNB. So that is the index that I'm investing in technically as altcoin number 3, and I hope those reasons make sense for you guys. Remember, this is a video with a 1 to 2 year time horizon. There are many projects, for example, like GNS, which has performed very well recently, Yamami as well, that I do like, but when I zoom out in terms of time horizon, I just can't verify if they're going to be up in 2 years' time. Maybe they're more rotation plays. So the reason why I'm leaving some altcoins out, which I've spoken about in the past, is really just a time factor. And there are some altcoins which over 10 years, for example, like the Graph, that aren't in this list, that I would put in this list, but Rand said 1 to 2 years. So I wouldn't put the Graph in this list, or Helium, or altcoins like a Cash, because I think they're going to take a lot longer. Doesn't mean I'm not bullish on them. It just means they don't fit within the constraints of this video, which is a 1 to 2 year hold. I hope that makes sense to kind of explain maybe why your altcoin isn't in here. At the end of the video, I will be going through the comments though and looking at some of your altcoins as well. So stick around for that at the end. All right, number 4 technically, is Arweave. Now, Arweave might fit into that category of a 5 to 10 year hold because long term, this makes sense as a bet because essentially it's a decentralized storage protocol that aims to store the massive amount of data that's in crypto and will continue to be created in crypto permanently on the blockchain. Unlike Filecoin, where you kind of have a subscription-based model, which is valid, by the way. I don't think they're a direct competitor. I think both are valid. Arweave goes after that permanent storage model. And recently, it has exhibited extreme strength in terms of the amount of storage that it is storing on the Arweave block itself. So we can go through the total storage amount. We can see that it's actually been increasing at a very, very fast rate. And we saw this tick up significantly in November with the Weave size now storing 113 trillion worth of data. Obviously, for every gigabyte, every terabyte you store on the network, you need to pay. So the more that Arweave stores, the more the network generates, and the more value is subsequently accrued to the token itself. So it does make sense that in the future, the vision for this is that the blockchain will continue growing, more users will enter crypto, and that means more data, and that data needs to be stored somewhere. Protocols don't want to clog up their own servers, so a lot of this data is outsourced to great protocols like Arweave, which are considered more secure from a security perspective and can actually handle all that data. And that's really the thesis behind Arweave. But they do have big partnerships, which is why maybe in the next 1 to 2 years, this isn't a bad hold either, although this is a long-term vision. So they announced their Meta partnership. What Meta is doing is they're storing their creator digital collectibles that they launched on Polygon. They're storing that data on Arweave. So Meta has chosen, they've had a choice of all the storage protocols. They could even have chose centralized, and they've chosen to store NFT data on Arweave over all of those other options like Filecoin. So this is a bullish sign that Facebook would be willing to choose Arweave. Clearly, they've done their due diligence and they've struck a partnership. And I do think this is just really the first partnership that could possibly occur. Like Reddit, all these other projects like Starbucks that partner with Polygon, many others as well. They could look to store their NFTs on Arweave as well, because you need somewhere to store this data, right? But Meta's not the only partnership Arweave has. I think that might be a misconception. They actually store data for Malaysia's Asia Digital Bank. They are one of the main data storage providers for Polkadot. So a lot of the data from the Polkadot network is shifted to Arweave. Obviously, Solana in the beginning was one of their main partners. A lot of Solana's NFT data and blockchain data is stored on Arweave, and the Graph as well. One of my favorite long-term plays is stored on Arweave. So many projects use Arweave, which is why I like it. You can see there's many more as well that are already using Arweave. It just seems like a good bet to me. $448 million market cap, almost fully diluted, 590. It doesn't seem, obviously anything could happen in crypto, but it seems like it's hard to go wrong from a long-term perspective. Correct me if I'm wrong, though. I'm not a financial advisor. I'd be happy to hear what you say in the comments. All right, that is Arweave. Let's get on to the last project before at the end we get into questions and trading and all that fun stuff. That is DOPEX. Now, I wanted to put a more risky one in here because I didn't want this whole list to be boring. Like, look, I love Ethereum, I love Polygon, but everyone knows about them. Basically, everyone owns them. You could maybe make the argument for BNB and Doge, although I don't think that's quite the case. Obviously, Arweave is more of a niche coin, but since we've been advocates of it for quite some time on the channel, most of you are probably aware of it. I think DOPEX is one, although I've spoken about it recently. This is kind of more of a fresh narrative. And I do think 1 to 2 years fits this quite nicely, because what DOPEX is it's an options exchange. When we think about how the flow of trading works in crypto, what happens is, as the market is in its infancy, most people trade spot because they're not very experienced traders. As the market grows and people get more experience, then they tend to graduate from spot to perpetual exchanges and trading perpetuals on centralized exchanges. So typically that transition from spot to perps happens, and that is where most people stop. That's where the intermediates stop. But if you go further down the spectrum and look at this industry advancing and people getting smarter and smarter participants from institutions entering crypto, what do they like to trade in TradFi? It's options. And options trading is the next natural progression from perpetual trading, in my opinion, because it offers the ability to have capital efficiency through having limited exposure to the underlying asset, but being able to expose yourself to positive or negative price movement. And this is why options is often a very efficient hedge in crypto. And it's why more advanced traders that implement hedging strategies tend to go for option strategies. Many of the top traders in the world and the top fund managers, they utilize options all the time. And I think in crypto, there is a need for a solid decentralized options protocol. Obviously, you could trade options on Derivatives, but I do think there is a need for a decentralized options protocol. Now, with Arbitrum recently experiencing huge growth, but being very hard to bet on because they don't have a token. What we are forced to do as investors is, if we want to get exposure to the Arbitrum ecosystem, which is very hot, we have to look at some of the tokens in the Arbitrum ecosystem because, as I said, although there might be an airdrop soon, you can't invest in Arbitrum right now. Despite the fact that most of us probably want to invest, we can't do it. So a lot of the value right now on the Arbitrum network is being accrued on the DApp layer and not the L1 layer itself, or the L2 layer in this case, which is Arbitrum. So when I look through the protocols on Arbitrum, obviously you've got GMX, but that's run really, really hard recently, and I'm not that comfortable buying at these prices. You've got Radiant Investor, which is solid projects. You've got a lot of projects that are cross-chain as well. But coming in at number 11 is DOPEX, and their primary pools or their primary usage is on Arbitrum. Technically, they're on BSC and Avalanche, but the majority of their vaults are on Arbitrum. That's why $22.8 million is on the Arbitrum side of DOPEX. So when I look at projects in the Arbitrum ecosystem, and I have to pick one with a 1 to 2 year time horizon, because I do want to bet on Arbitrum over the next 1 to 2 years, then it kind of makes sense for me to bet on something that's A, growing rapidly, but 2, also exposes us to the next shift in trading, which I believe is options. Now, this options transition could take quite a while. Maybe it'll take 3 to 4 years. So maybe 1 to 2 years doesn't do this justice, but I still do think it's a narrative that has to run at some point. And DOPEX is in a good position to do so. So this is the exchange. You can invest in straddle options. They've got vaults, VE DOPEX as well for staking DOPEX. I'll probably do a more in-depth tutorial in the future, but you can essentially stake in their straddle Atlantic vaults, which are enable you to collect premiums and compound funding fees. But the growth we've seen from DOPEX off the back of some of these vaults is crazy. Like, the unique address holders per token is now over 180,000. Some of the statistics as well are very, very, very bullish. The total holders of our DOPEX, which is a rebate DOPEX, a token that is used to pay out stakers in particular vaults, is at its all-time high. So is DOPEX holders as well. So the stats are very bullish from that perspective. The price stats aren't bullish, obviously, since it's down significantly since the bull run, as most projects are. But we can look at that as an opportunity. And yeah, it's run almost 2x since its bottom. So that is just something to be cautious about. But there's a lot to be excited about. They've got their GMX fork launching soon, but this is not just a typical fork. This is more so an options perpetual exchange. So GMX obviously offers perps. DOPEX is doing their version of GMX, but with options. And given how hot the perp DEX narrative is, this is a very enticing product for DOPEX to be launching in the near future. They're also offering a pretty nice fee rebate. So strategy fees are charged at 0.5% of position size, which is paid to VE DOPEX holders. So there's obviously that incentive to stake to get a percentage of protocol's fees back. That's why it's called a real yield protocol, because it's not emissions-based. It's revenue-based, which is also a positive sign, in my opinion. And obviously the options narrative at some point, in my opinion, will run. So whether that's in the next 1 to 2 years, we're going to find out. But I'm kind of betting that it will be. So I'm putting it in this category. But let's see. That's why it's my number 5th holding. So hopefully you guys enjoyed those 5. What I'm going to do now is run through the charts, show you guys a little bit as to what I'm looking at trading, and answer some questions. In the meantime, I'm going to make this kind of a regular segment. And what this is a segment where at the end of each show, I hang out with you guys. We just do some trades for 5 minutes before I switch over to Instagram. So I'm going to go through my charts for a few seconds. You guys know I'm not an expert trader, but I am getting more serious with the trading at the moment. I've been dedicating a lot more time towards it. Since I do spend 12 hours a day researching crypto, it only makes sense that I start to kind of apply some of this logic to create an edge in trading. So that's something I'm going to be doing more of on the shows at the end of each show. I think the first obvious place to start with is Bitcoin. Right now, look, we're kind of in no man's land. We're kind of in the middle of these two ranges at the moment. It would make sense for us to come down and test 16.3 at some point. But for me, I am expecting another push to the upside before we get this next leg down, if we do get the next leg down. So there is a level that I think could be a decent scalp trade level, and that is the $17,300 level. If we do push up towards there, I don't think this is a terrible zone for a short, because what you can do is set your stop loss slightly above at, let's say, 17.5. If we end up breaking, you'll obviously get stopped, and on the retest you can long an altcoin, which will outperform Bitcoin, or you can just short the 17.3 region, which is the next region that I'm eyeing. I'm not sure if it's going to hit today, but that is the region that I'm eyeing on Bitcoin. And if you want to put in this order, you can put it in on Apex, which is a decentralized exchange on layer 2. So it's a very fast, easy way to trade. Rather than using a centralized exchange, you do get the benefit of it being non-custodial, so you keep your own assets, unlike something like FTX, and you can also have a very fast, easy trading experience on a DEX. So that's one of the reasons why I'm using Apex to trade at the moment. They're also a show sponsor, which is really cool because you guys could take part in their trade to earn comp, where they're giving away $190,000 worth of weekly trading rewards. So if you do decide to trade on here alongside your centralized exchange or instead of your centralized exchange, you will get access to crazy rewards because they're doing their trade to earn program where you can earn Banner, and there's a lot of utility to stake the Banner token as well. So there's a link in the description to sign up for an Apex trading account, and you guys can trade to earn. And that's really enticing. Why not trade on a platform where you can actually earn something back instead of just trading and having to pay fees constantly? You can earn fees back because they are heavily incentivizing it because they just launched and they're partnering with BYBIT. So this probably won't be forever, just for the next few months while they're early to the market. They're really incentivizing people to trade on the platform. So that's only a good thing for you guys if you trade on Apex. So yeah, that's my Bitcoin level. Let's look at my Ethereum levels at the moment because that is also a trade that I am looking at. Let's look at the Ethereum chart on Apex as well. So the Ethereum chart is looking pretty similar. It looks like the 1300 level is the equivalent level on Ethereum versus Bitcoin. So we could potentially see a push up to this region, and then that would be that level to open a short from. We may not get there, guys. We may fall short at 1260. If we do fall short at 1260, that's quite bearish for the price because I think that means we're likely going to be making a lower low. So we really do need to clear that level and test 1300. That's where I'd open a short. And then if we break above, once again, you just set your stop slightly above. So if you did get stopped, worst case scenario, you lose a few percent, you get stopped here. And then on the retest, we long altcoins, which are going to outperform Ethereum and Bitcoin. That is my strategy if we hit the $1,300 region. If you guys were on my Instagram yesterday, you would have made like 30 or 40% on the ape trade. It was a crazy trade. We hit it perfectly on the nose. So congrats to everyone that joined my Instagram afterwards. We made big profits there, and we could afford to lose the next 10 trades and still be up after that trade yesterday. So it does pay to join the Instagram after the show, guys, for a little bit of extra trading juice, but I am making an effort to start to include some of my trades on the show, my thought process on the show to kind of help you guys, more of the short-term guys. You guys know primarily I'm a long-term investor, but I do allocate 5%, around 5% of my portfolio to trading short-term because I believe it's a good way to keep kind of the dollars flowing in the meantime and then take some of those profits to average back into long-term positions. So you got to remember my trading portfolio is a fraction of my long-term portfolio, around 5%. So if you are a long-term investor as well, you can consider just trading with a little bit and not trading with it all, of course, and risking a crazy amount. But it is a lot of fun. And I do enjoy the short-term stuff because I'm in the market all day and I don't know, I feel like I'm pretty in touch with the market and get a good feel for things, which is why I kind of want to be more transparent with what I'm trading. So yeah, with the ApeCoin short yesterday, we got this at, where exactly did we get it on the hourly chart? 14 point, I think, no, not 14. I think we got it at 417. So we got it here. I believe we got it here on that test. And then we obviously shorted all the way back down to 3.8, which on 5x leverage was a nice 25% trade. If you got in slightly higher, if you got in slightly earlier, then you would have made 30 to 40%. Or if you use 10x leverage, you would have made 50%. But I traded on 5x because I'm trying to be a little conservative. So yeah, those are my Bitcoin levels. Bitcoin 17.3 for a short. Obviously, you guys know my plan. If that flips into a long, then we long altcoins. Ethereum as well. 23, not 2300. What am I saying? 1300 is my level for Ethereum. So yeah, 17.3, 1300. Those are my levels, and you guys kind of know the drill. If we do end up flipping that into support, so those are my charts. Let me know if you see anything different. I'll answer a couple questions now before we head onto Instagram and continue the conversation over there. Someone said Mask has gone up 5x from October. Yeah, I mean, that's only expected when CZ puts a seemingly new or random project onto a major index that a lot of people are investing in. So it's only 6% though of that total Bluebird index. So I don't think it's too risky to buy in a bit higher. But look, you got to make your own decisions there. You could even create your own index with your own weightings. Instead of investing in Bluebird, you could do Doge and Bitcoin 50-50 or 60-40. But I just find it easy to invest in the index. And it also meant that I could include it in this 5 altcoin list without technically cheating by listing 3 altcoins. That was helpful as well. Something odd about the Banter host, they never talk about security. Man, I talk about this all the time. I don't know if you watch my show, bro. I talk about security so much that people get sick of it. So I stopped talking about it because people are like, Miles, we get it. You got to be safe. But no, I talk about this all the time, bro. Yeah, always have a ledger. One of the reasons why I'm trading on Apex is because it's non-custodial. So I talk about it. Because I think it's genuinely a good exchange to use for that reason. And you can have it on your MetaMask with a ledger, so it's less risk. So many security factors go into my trading and investing decisions. Someone asked about NIA. So for NIA, man, I could talk for 10 minutes on NIA. I'll just give you the real TLDR, just super quick. Short, it's not in this list because I just have projects that I prefer, frankly. The argument for NIA is the massive incentives program. The argument against NIA is sharding the solution? Ethereum obviously scrapped sharding. So if Vitalik isn't a fan of sharding, then is sharding really the way forward? Obviously, it does work, but is it the most optimal way to scale? That is the real question with NIA. If it is, then NIA should succeed because they're going after quite a novel approach, and they've got that massive incentives fund. But if it doesn't, then does NIA fail? So it's kind of like a bit of a bet. It's a bet on sharding. So you got to work out whether you like that or not. I have a small position, nothing big. Someone asked about Phantom. Once again, Phantom just didn't make this top 5 list. It's slightly riskier in its risk profile. It almost did because I really was pleasantly surprised by the amount of runway that was exhibited via the update that Andre issued based on Phantom's financials. It's got 30 years runway. Half of its total market cap is actually in the treasury. And they're just in a very good spot to continue with marketing and ecosystem initiatives. So Phantom's in a much stronger spot than it was a couple of months ago, in my opinion. But I'm going to take this over to Instagram, or the show's going to go for an hour. So we will continue answering these questions. My Instagram is Miles_Deutscher. Link in the description as well to join the Instagram, and we will continue the chat over there. I've just started it simultaneously. I think there's a link in the description. Yeah, it's here. Instagram.com/Miles_Deutscher. So come over there, hang out. If you're not following me over there, follow me over there. We live stream after the show every day, and we hang out as a community and do a Q&A. And I will answer all these questions. People asking HBAR, Dodo, Filecoin. Yes, I'll answer all of these over on the Insta. So I'll see you over there right now. But until next time, I'll see you tomorrow at 7 p.m. EST. Have a lovely day, everyone. Peace out.